So shall I start? Hello, a
Start.
wonderful morning to everyone here. I am Jainam Jain, your host for today. Welcomes you all to an interesting session based on GST returns. Firstly, a huge round of applause to each and everyone for joining today on bright Saturday morning. Let's aim together to make most out of this session. Before we dive into our deep discussion, I would like to invite everyone to rise for ICI motto song.
Recording pause केलंय श्वेताली.
Hello, a wonderful morning to everyone gathered here. I am Jainam Jain, your host for today, welcomes you all to an interesting session based on GST returns. Firstly, a huge round of applause to each and everyone present here for joining on our bright Saturday morning. Let's aim together to make most out of this session. Now, I would like to welcome our today's guest, CA Rajesh Agrawal sir, today's speaker, CA Amruta Kulkarni ma'am, chairperson of Pune branch of Vikasa, and all committee members. This session is organized by Vikasa of ICI and hosted by Pune branch of Vikasa of ICI jointly with Ahmednagar, Bhavnagar, Nanded, Navsari, Sangli, Surat, Sambhajinagar, Vadodara branches of Vikasa of ICI. Now, I would like to call Amruta Kulkarni ma'am upon stage to enlighten the students with opening remarks.
Thank you, Janam. Audible?
Yes, ma'am.
Thank you so much, Janam, for the wonderful morning greetings. At the outset, my compliments to all the participants, those who have joined early morning on a weekend to know the nitty-gritties involved in the income tax and GST series that has been organized by the Pune branch of Vikasa and jointly by other branches, those who have shown their willingness to join this practical series. My compliments to all the branches as well as the volunteers and the Vikasa team members at the outset for organizing such a interesting series on income tax and GST for the students. And I'm sure that all the participants, those who have joined, will definitely gain a lot from the speakers. The practical nitty-gritties involved, the intricacies involved in the scenarios, wherein they will be guiding to all the participants on filing of various returns, could be the in various uh, uh, provisions that are very much important, the amendments that will be taking place, that have taken place and that will be applicable in upcoming times. To all the participants, I'm sure that from the upcoming week, while you'll be working with your principals in your offices, the series will definitely go in a long way, because that has been designed and crafted in such way that they will not only give you the sections and amendments as per the books, but how that has to be applied and that can be used in your day-to-day practical working experiences. So that will go in a long way. So my compliments and kudos to all the team members, those who have organized this initiative, have taken this initiative to organize this series altogether, and to all the speakers for sparing their valuable time and sharing the experiences that they have gathered over the years with all our future chartered accountants, those who are definitely the pillars in every office, though those who help us in our day-to-day activities. And on behalf of all the members also, I would like to thank the Vikasa members and all the speakers for sparing their valuable time and taking up this initiative. Without taking much time, I wish all the participants a very happy learning and wishing you all the very best today and always. Thank you so much. And over to you, Jainam, for the further formalities. I also recognize the presence of all other Vikasa chairpersons and all other volunteers and office bearers of various branches, those who are present here on this virtual platform. Thank you so much.
Thank you, ma'am. Ladies and gentlemen, the time has come. It's my honor to introduce our esteemed speaker for today's session. Mr. Rajesh Agrawal, sir. Sir is a distinguished chartered accountant with over 18 years of experience in indirect taxation, including GST, central excise, customs, and service tax. He is a partner at the renowned firm SRA and Company, where he specializes in tax consultation and litigation. Sir's academic prowess includes certification in GST, forensic accounting, and fraud detection from ICI, and he is currently pursuing LLB from Pune University. His dedication to the profession is evident from his extensive service as the immediate past chairman and long-serving managing committee member of the Pune branch of WRC of ICI. In addition to the professional achievements, Sir has made a significant contribution to the community through his roles with Lions Club of Pune Ganesh Khind and as a charter president of Lions Club of Pune Chartered Accountants, supporting CA students from financially weaker sections. An accomplished author and speaker, he has penned numerous articles on service tax and GST, contributed to the GST reference manual published by WIRC. He is a regular speaker at industry forums, sharing his expertise and insights. Please join me in welcoming CA Rajesh Agarwal, sir.
Before Rajesh sir speaks, Jainam, I would also like to add that Rajesh sir has always been a message away or phone call away to all the students, members always. And the topic that he has chosen, the do's and don'ts while filing of the GST returns. I am sure that this recording or this series entirely can not only be viewed by the students but members also while they are working in their offices. So congratulations for inviting a speaker like Rajesh sir for this session. Thank you so much. Hello, Rajesh.
Hello, thank you, Amruta.
Now, I would like to invite Mr. Abhiraj Shinde, Vice Chairman Pune Vikasa, to felicitate today's speaker, CA Rajesh Agarwal, sir.
Thank you. Thanks a lot.
Yes, sir. Filing returns can be a daunting task, but fear not. Today, we are going to unravel the mysteries, tackle common pitfalls, and arm you with the knowledge to file with confidence and precision. So sit back, relax, and let's embark on this journey together to make GST return filing a smooth and stress-free experience. Let's dive into it. Now, I would like to call CA Rajesh Agarwal, sir, to initiate the session on topic precautions to be taken while filing GST return.
Thank you, Jainam. Thank you, Amruta. I really thanks Pune Vikasa for considering me as a faculty for this session. I just share my screen. Is it visible?
Yes, sir.
Friends, this is one of the very important topic in GST, precautions to be taken while filing returns. The importance is because if you take care of all the provisions of law and system while filing returns itself, you can avoid future litigation. So I just start with precautions. Why precautions? It avoids clerical typing errors and omissions while filing return. And that is very important because complete and correct return can avoid multiple litigations. It avoids loss to the organization, avoids task discrepancies, also developed vendor and customer relationship. This we all are aware of. Friends, I just put all my points why this session is important on this slide. Second, why we are receiving reconciliations with respect to GST reconciliations. Most of the notices we are receiving are concerning reconciliations, and department has given these 15 parameters based on which we are receiving different notices. No doubt other litigation areas are there, but mostly around 90% notices are issuing on the basis of these parameters, and these parameters are nothing but based on your basic reconciliations. See, ineligible ITC claimed from non-genuine taxpayers whose registration certificate is cancelled. Excess output tax in GSTR1 compared to 9. Again, it is a reconciliation. Excess output tax in EV bill compared to 3B. Ineligible ITC from non-filers. Again, reconciliation with 2B. Excess ITC claimed in 9, 3B, which is not confirmed in 2A. Again, reconciliation. These are all based on reconciliations. Friends, if we maintain proper reconciliation, we file return, then we can avoid 90% reconciliations in 90% litigations in GST. What are the important reconciliations in GST? We used to do this in our offices. We check tally figures with 3B, 3B figure with 1. We match every return every month. Reconciliation, reverse charge liability as per books, as per 3B. We have availed credit of RCM paid, whether the credit is eligible or not. What are our inward supplies? Inward supplies are eligible for input tax credit. What is eligible input tax credit in books? What is eligible input tax credit in 2B? Whether we have availed full input tax credit. These are all types of reconciliations we used to maintain. Very important terms in GST. I like to give one disclaimer. I have covered topic considering basic concept of GST you are aware of, like what is zero rated supply. It is not exempt supply. Zero rated supply is a export includes supply to the SEZ. So these are basic concept I assumed you are aware of. Common GST reconciliation items on which GST is not payable. Why this is very important slide? Because friends, whenever there is no GST payment, we have to take extra care while filing return. Why? What is zero rated supply? It is export. Friends, export, can we comply all the conditions for complied for considering the transaction as export? What are the conditions to treat this transaction as export? For goods moving out of India, moving goods from India to outside India is a basic definition of export of goods. But for services, we have to check all 4 conditions. Recipient should be located outside India. Supplier should be located in India. Consideration should be received in foreign currency. And foremost is place of supply should be outside India. But if you refer the provisions of section 13, place of supply, some services are based on the performance of services. Some services, if the services are intermediary services, the service provider, location of the service provider is a place of supply. If the location of the service provider is place of supply, then it is a taxable transaction. In most of the time, if at revenue side, we see export declared by our client, export, and we also treat the same because the LUT has been executed, basic conditions are complied. So we also treat this transaction as export without going into the depth, whether consideration is received in foreign currency, whether consideration is received within the time specified by RBI, or whether the place of supply is outside India. The basic condition should be satisfied. Just on the basis that supplier is located in India, recipient is located outside India, or sometimes even consideration is received in convertible foreign exchange, the transaction is not treated as export. There should be compliance of 4th condition, that is place of supply should be outside India. In case of intermediary and the performance-based services, place of supply is different. While filing GSTR1, most of us, we miss some details to be mentioned in the prescribed columns. Why? because it is optional in the return, like shipping bill details, shipping date details, shipping date, and port code. Why this is important? Because when the data is transmitted to IceGate, without these details, data is not getting transmitted to IceGate. If the export is with payment of tax, your refund will not get processed. Very important. Without fail, without checking whether the transaction is with export with payment of tax or without payment of tax, I suggest everyone to put this detail in every return to avoid your loss of refund. Outward supply notified under RCM. What is this? These are the transactions which are taxable under reverse charge mechanism in the hands of recipient. I am a service provider, then it is not taxable in my hand, but it is taxable in recipient hands. Friends, very important with respect to the RCM supplies, section 17.3. Note it, section 17.3, which defines exempt supply for the calculation of section 17, rule 42, 43. Exempt supply includes transaction which are taxable under reverse charge mechanism. Whenever we do reverse charge mechanism transactions, we should treat these transactions as exempt transaction for the calculation of rule 42, 43 calculations. Next is outward supply wholly exempt under GST. If the transactions are wholly exempt or nil rated, we can mention these transactions under B2B or directly under exempt column. But please note, friends, wherever there is an exempt supply, we must take care of rule 42, 43 calculation. If there is exempt supply, there must be some rule 42 reversal. Input tax credit should be reversed according to the calculation. Non-GST supply. As you are aware that non-GST supply includes petrol, diesel, alcohol for human consumption. These are the supplies included in the definition of exempt supply, and again needed to be considered for the calculation of rule 42, 43 and should be presented properly in the GST return. Schedule 3 transactions. Schedule 3 transactions are the transactions which are specified under Schedule 3. Schedule 3 is goods, the transactions which are neither goods nor services. If any transaction is neither goods nor services, it cannot be supply under section 7. Then it is very clear, Schedule 3 transactions are non-GST supply भी नहीं है और exempt supply भी नहीं है. So you need not to report Schedule 3 transactions in the return. Tax paid on advance received against services in previous year, in the financial year, sorry. Tax paid on advance received against services. These are, sorry, it is previous financial year. Whatever we have paid GST on the basis of advance received in previous financial year. This year we are issuing invoice against that invoice. Once we have already paid GST on the basis of advance received, that transaction is getting adjusted in the GSTR1 and GST is not payable on that particular invoice. Not payable means we have already paid on that invoice. Commercial and financial credit note. Very, very important. Commercial and financial credit note. And what is GST credit note? GST credit note is a credit note issued under section 34 and read with rule section 15. सेक्शन 34 में हम कौन से क्राइटेरिया के लिए क्रेडिट नोट दे सकते हैं वो स्पेसिफाई किया हुआ है. इफ देयर इज एनी रेट डिफरेंस, इफ देयर इज एनी क्वांटिटी डिफरेंस, इफ देयर इज क्वालिटी डिफरेंस, they have specified the criteria. If I have observed many times our clients are issuing credit note for any reason. Any reason. If customer want to debit something, supplier is issuing credit note. Whether that is specified reason, they are not checking. Friends, whenever we are filing return, please check whether the credit notes are issued under section 34 in the for the only specified transactions, not for any reason. It is not allowed because directly you are reducing your tax liability by issuing tax credit note. Commercial credit note is a credit note which is without GST. If the discount given by supplier is not as per section 15, then you cannot reduce your value as per section 15. That time, supplier is issuing commercial credit note instead of GST credit note. If you cannot reduce your value as per section 15, the credit note issued is a commercial credit note. And very important, credit notes which are commercial or financial need not to report in GSTR 1 or 3B. There is no column because this is not a supply. Since this is not a supply, GSTR 1 does not cover these transactions. Even in 3B, since these are commercial credit notes and does not impact GST, you don't have to reduce your input tax credit. There was one circular issued by the GST department for commercial and financial credit notes. If the credit notes are issued, financial or commercial credit note are issued, you need not to reduce your input tax credit. But unfortunately, department has revoked that circular. But friends, we have multiple advance rulings, appellate advance ruling, which is very famous from Telangana, is a MRF Limited. It specifically said the input tax credit reversal is not required in case of commercial or financial credit notes. Now next is provisional entries or book entries. These are the entries in the books which does not impact your GST liability. Why not required? Because time of supply of that transaction does not occur. Time of supply does not occur and GST is payable in future period or may not be payable because that is not a supply transaction. Could be there is a non-supply transaction or supply occurred in the future. Time of supply occurred in the future. Unbilled revenue, again the same. Time of supply occurred in future. So we have to keep a track. Whatever we have provided again under unbilled revenue, what invoices are issued in the future period by the client. If we can maintain this for the benefit of our client, or we can ask our client कि ये जो आपने अनबिल्ड रेवेन्यू का प्रोवाइड किया है बुक्स में, उसके कितने इनवॉइसेस आपने फ्यूचर में इशू किए हैं. It will be very, very beneficial for the client. Next slide is common GST reconciliation items which are not recorded in revenue side. See, हम क्या करते हैं जनरली जब भी रिटर्न फाइल करते हैं फ्रेंड्स, हम क्लाइंट का टैली लेते हैं और जो भी वर्किंग क्लाइंट ने दिया है उस पर रिलाय रह के हम रिटर्न फाइल कर देते हैं. बट फ्रेंड्स, वी मस्ट चेक दीज 5 आइटम्स. मेरे नॉलेज के हिसाब से अभी मैंने 5 आइटम्स शॉर्टलिस्ट किए हैं, इससे ज्यादा भी रह सकते हैं. तो ये जो 5 आइटम्स है ये क्या है और इसका इंपैक्ट कैसे आएगा रिटर्न फाइलिंग में. फ्रेंड्स, अनएडजस्टेड एडवांस रिसीव्ड अगेंस्ट सर्विसेज ड्यूरिंग द फाइनेंशियल ईयर. See, advance received is not a transaction at revenue side. Still, we have to check the debtor side, whether there is any advance received on which tax is payable. This is most important to check. Why it is important? We are paying liability in future when we are issuing invoice. From the date of receipt, till the date of invoice, we have to pay interest at the rate of 18%. And this is just a cost to the SCC. Next is section 15 valuation adjustments. There are so many adjustments. Like we are charging transport charges to the customer. We are charging insurance to the customer. We are charging loading, unloading. Labor says, very important, the item like labor says, which is not reflected in profit and loss account, but routed through the current liabilities, collected from the customer, paid to the government. Why labor says is addition to the value for calculation of GST? Because section 15 can allow you to reduce only GST from the value and no any other taxes is allowed. On clarification, department has issued TCS we can reduce. As a clarification, TCS we can reduce, but labor says or any other taxes if we collect from the customer, it has to be considered for the purpose of valuation. Friends, ये जो लेबर सेस है या एनी अदर आइटम लाइक लेबर सेस, ये रेवेन्यू साइड में नहीं है. तो हमारे पास कोई बिल का इनवॉइस का कॉपी नहीं आ रहा है कस्टमर से, क्लाइंट से, तो इसका ट्रांजैक्शन हमको समझना पड़ेगा कि हाउ दिस इज टैक्सेबल एंड हाउ टू इट हैज टू बी कंसिडर व्हाइल फाइलिंग रिटर्न. मोस्ट इंपॉर्टेंट सेकंड, goods supplied free of cost by the customer. If in any transaction goods are supplied free of cost by the customer, suppose one टंकी कॉन्ट्रैक्ट है, उसमें क्लाइंट ने आपको बोला है कि मैं आपको सीमेंट और स्टील दे दूंगा, तो जो कॉन्ट्रैक्ट है कैन वी कंप्लीट विदाउट द यूज ऑफ सीमेंट एंड स्टील? नो. Then we have to consider the value of cement and steel while issuing invoice. Again, in the case of job work, we observed amortization of the dies or molds free of cost supplied by the customer is not considered by many manufacturers. क्यों नहीं consider किया? Because there is one notification. नोटिफिकेशन इज क्लैरिफिकेटरी इन नेचर. उन्होंने ये क्लैरिफाई किया है कि कौन से ट्रांजैक्शन पे एमोर्टाइजेशन नहीं लगेगा और कौन से ट्रांजैक्शन पे एमोर्टाइजेशन लगेगा. तो जो एमोर्टाइजेशन नहीं लगेगा जो ट्रांजैक्शन है, दैट इज प्योर लेबर ट्रांजैक्शंस. देयर इज नो सप्लाई ऑफ गुड्स, ओनली सप्लाई ऑफ सर्विसेज इज देयर. इन केस ऑफ सप्लाई ऑफ गुड्स, आई जस्ट लाइक टू ऐड वन एग्जाम्पल. सपोज मेरे कस्टमर ने मुझे ग्रेन्यूल्स भेज दिए और मोल्ड्स भी दिया है और मुझे कहा है कि इसका आप पर्टिकुलर प्रोडक्ट इंजेक्शन मोल्डिंग मशीन से बना कर दो. तो जो प्रोडक्ट मैन्युफैक्चर हो रहा है, दैट इज नॉट सेल ऑफ गुड्स, दैट इज सेल ऑफ सर्विसेज, दैट इज ओनली जॉब वर्क एंड amortization is not required. But I am using my granules, my machine, the molds are given free of cost by the customer. In that case, amortization is required as per the notification. And amortized value of that die, ये क्या है? The cost of die is divided by the life of die. अगर उस डाई से हम 1 लाख इंजेक्शन मोल्डिंग मशीन से प्रोडक्ट बना सकते हैं और उसकी कॉस्ट 10 लाख है, तो 10 lakhs डिवाइडेड बाय 1 लाख, तो पर प्रोडक्ट 10 रुपीज मुझे वैल्यूएशन में ऐड करना पड़ेगा फॉर द पर्पस ऑफ जीएसटी कैलकुलेशन. तो दीज आर द ट्रांजेक्शंस विच आर नॉट रिफ्लेक्टेड एट योर रेवेन्यू साइड. मगर हमको देखना है कि कौन से क्लाइंट के केस में दिस प्रोविजंस विल अट्रैक्ट. शेड्यूल 1 एक्टिविटीज. Most of the times transactions with the related parties are not reflected in books of account nor discussed with our CA or consultant. In that case, we are missing the GST collection and payment, and it impact your future litigation and liabilities, additional liabilities, interest and penalty. Not only this, when the department has initiated investigation, input tax credit of the taxes paid under section 74 and 129 are not eligible to the recipient. Friends, it is huge loss to both of us, service provider and service recipient. And in Schedule 1 activities, most of us are related parties. It is double loss to the entity. What are the Schedule 1 activities which are not reflected? Renting, support services to the branch. If we have a branch office outside Maharashtra with separate registration, we have to invoice for the services provided from Maharashtra unit to the outside Maharashtra unit. This is cross charge. Suppose some services are provided to the employees, but employees are not taxable because these are Schedule 3 item. Department has issued clarification. The services provided as per the contract with the employees, then it is not taxable. अभी हम अगर एम्प्लॉइज को फूड दे रहे हैं, उनका इंश्योरेंस निकाल रहे हैं, उनको ट्रांसपोर्ट सर्विस दे रहे हैं, उनको यूनिफॉर्म दे रहे हैं, और हम उनको और कुछ इंसेंटिव्स दे रहे हैं, इफ इट इज कॉन्ट्रैक्चुअली गिवन, देन नथिंग इज टैक्सेबल. कितना क्लैरिफाई किया है डिपार्टमेंट ने कि इफ इट इज कॉन्ट्रैक्चुअल, देन व्हाट इज इंपॉर्टेंट? इंपॉर्टेंट इज टू ड्राफ्ट कॉन्ट्रैक्ट comprehensively. So we should suggest our client, whenever there is a transaction between employees and employer, the contract should be comprehensive and covered each and every item. If the contract is not comprehensive, then the transaction between employer and employees will attract GST. And ultimately it is a litigation, future litigation. Sale of capital goods. Capital goods usually we route through the fixed assets of the balance sheet. That's why it is not route through the revenue side. Sometimes revenue on sale of capital goods, sometimes loss from the capital goods we mentioned in the profit and loss account. But the revenue side is not directly impacted on sale of capital goods. So friends, please take care of. Schedule 1 also covers sale of capital goods to the related without consideration, on which the input tax credit is availed. And again, it is a supply. That's why we have to calculate proper tax on the sale of goods. Again, in case of motor vehicle, sale of motor vehicle, how we calculate GST? We have to calculate written down value as per the Income Tax Act and find out what is the income or loss on in that transaction. If it is a profit, on that profit we have to pay tax. If the vehicle is below 1200 cc, we pay GST at the rate of 12%. If the vehicle capacity is more than 1200 cc, we pay 18%. Invoice we have to prepare accordingly. It will be a tax invoice if we are collecting GST. Income adjusted against expenses. In many cases, especially transport charges, we collect transport charges from the customer and directly credit it to the expenditure. Because as per the client, it is not my revenue. I have collected and I have paid. But friends, when reconciliation, we prepare reconciliation, this is most important item we have to look into. Now, some more important points in the reconciliation. Incorrect exemption or classification leading to non-payment, short payment or excess payment of IGST. What is incorrect exemption, friends? Suppose some services are not exempt, but client treat it as a exempt supplies. Especially in case of educational institution, religious trust, religious organization, charity organizations, these organizations treat themselves as exempt. But whether all the transactions are exempted? No, only specified transactions are exempted. We have to look into each and every transactions separately by applying line item of the exemption. We have to go through the exemption notification 12/2017. If 12/2017 is specified that that transaction is not taxable, then we can treat this as exempt. If that is not covered under 12/2017, we have to intimate our client. Friends, very important to, as a consultant, as an auditor, as a CA, it is very important to intimate our client these transactions are taxable or not. If we miss the classification, huge liability to the client. Recently, I faced one case in which client has paid GST at the rate of 18%, considering the Google classification. What is Google classification? He just Googled what is the rate of GST on the particular item. That is actually motor vehicle parts. He Googled and that transaction was 18%. When department approached, why you have collected GST at the rate of 18%? He checked notification, there was no such entry in the notification. And the Google entry was linked to the customs classification, customs description. And that was not applicable as it is to the GST, because GST tariff is different. GST notification is different. We have to refer 1/2017 to check whether that classification is correct or not. And the volume was the transaction was more than 100 crores. The difference in the rate was 10%. More than 10 crores is a liability with interest and penalty. Now department is asking for payment. Even in case of ice cream, many shopkeepers who are not manufacturing or who is not preparing the food in their cafe or restaurant, who are treating themselves as a restaurant, when actually it is not. The foods get prepared in the factory and just it is a distribution channel. In that case, can we treat the transaction as a restaurant? Can we tax at 5%? Whether notification number 20/2090 is applicable? Friends, we have to check minutely the classification. Very, very important. Same in the second is again the same, incorrect rate adopted, again classification error. Classification of supply as a composite or mixed supply. As we are aware that section 8 defines what is composite supply and what is mixed supply. If the transaction is a naturally bundled, the transaction is composite supply. If the transaction is mixed supply, it is artificially bundled. अगर एंजियोप्लास्टी कर रहा है डॉक्टर, तो उसमें जो स्टेन बैठता है एंजियोप्लास्टी में, कैन वी से कि डॉक्टर इज सेलिंग स्टेन? नो, इट इज अ हेल्थ केयर सर्विस. Without stain, we cannot complete healthcare services. In that case, GST is not applicable. अगर हम ब्रश के साथ पेस्ट फ्री दे रहे हैं, can it is a naturally bundled? No, it is artificially bundled. And the highest rate of tax will be applicable as per classification. There are multiple cases, friends, composite and mixed supply. In many cases, SSCs are dividing contract when it is a composite contract. Just for sake, just for the benefit of client, customer, our clients are dividing the contract, which is when it is not possible, as these contracts are a composite supplies. We have to check whether these are a composite supplies or mixed supplies. In many cases, IGST is payable, but client has collected CGST as GST, or vice versa. Because we never check what is place of supply. If the goods are moving outside Maharashtra, it is IGST. But if the transaction is bill to ship to, and we are billing to the Maharashtra customer, then as per section 10 of IGST Act, CGST and SGST is applicable, not IGST. In many cases, like transport charges on export of goods, before amendment in the last budget, it was taxable as IGST, even though the supplier and recipient both are located in the same state. Now it is amended and the place of supply is as per our regular provision. There is no special provision for export of goods. Needs to apply proper valuation provisions. We have already discussed in our last slide, section 15. GST paid on advance received against services and its adjustment. Again, we have discussed in our last slides. But again, it is important with respect to the reconciliation is concerned. Section 7. Friends, many transactions are not covered under the definition of supply. Schedule 3 is outside the purview of the definition of supply. What the transaction is, which transaction is supply? There should be consideration. It should be in the course or furtherance of business, or from one person to another, made by a person to its member or constituents, or vice versa, for cash, deferred payment, or valuable consideration. It is very specific definition, even though it is an inclusive definition, specific, and again includes Schedule 1 activities. When the transaction does not comply with the definition of section 7, we need not to pay GST on that transaction. Why not to pay GST? Because section 11, which gives power to the government to exempt the transaction, is mandatory exemptions. All exemptions given under section 11 are mandatory exemptions. In GST, in service tax or excise era, exemptions given was optional. We can avail exemption or we can forego exemption. But in GST, section 11 is very specific. We have to take the exemption. If the transaction is not taxable or specifically exempt, we can't pay GST on that transaction. It will definitely impact the input tax credit of the recipient. Point number 1. 2, when you are depositing the collected tax by utilizing input tax credit, again department can take objection. Schedule 2, the transactions are specified whether it is a goods or whether it is classified as services. This is a GSTR 1. We usually file. It is a statement of outward supplies. We file this statement under section 37. And what details we need to file this is a GSTN name, period, turnover is a first slide. Second, B2B transactions. B2C, small, B2C, larger. Export, exempt supplies, non-GST supplies, advance, tax paid on advance, credit note, debit note, advance adjustment, HSN, document details. What is my observation, friends? We have not taken place of supply column very seriously. We just mentioned if CGST is charged, place of supply is Maharashtra. If IGST is charged, place of supply is outside Maharashtra. Friends, it is totally impacting our customer. If we by mistake mentioned wrong place of supply, our client's customer is not eligible for input tax credit. Just for verification, whenever you reconcile GSTR 2B with your purchase register, mind it, friends, you just check place of supply column in GSTR 2B. If it is other than Maharashtra, if you are filing return for Maharashtra client, and the place of supply in the column is other than Maharashtra, you have to check whether input tax credit is eligible or not. Credit note, debit notes, we have discussed. Friends, credit note which are issued by the supplier, debit notes which are issued by the supplier. I have just observed in case of purchases, in case of vendor, in case of purchases, our client if purchase goods from the supplier, when supplier is issuing credit note, our client is issuing debit note to the supplier. And the debit note also included in the GSTR1 is very wrong. Section 34 is very specific. As per section 34, credit notes or debit notes can be and should be issued by only supplier. That only we can consider in GSTR1. The debit notes or credit notes issued by recipient is not part of GSTR1. It is only if it is issued by supplier in the specified time limit given in section 34, that is 30th November of the next year. Reverse charge. In B2B transaction, you can mention taxable under reverse charge. Details of exports. We have already discussed shipping bill details and port code must be filled, even though with the transaction is without payment of tax or with payment of tax. Details of exempt supply, nil rated supply, non-GST supply. Whenever there is a exempt supply in the hands of from the client's hand, we must mention and take care of rule 42-43. Tax paid on advances. Friends, we many times we have paid taxes on advances, but it is when it is a time of adjustment, we again consider that invoice separately, or we forget to tax adjust that invoice with the advances. So it is better to keep one reconciliation on advances and advance adjustment. Amendment of any of the above details filed in previous month. Whenever there is amendment, we can amend in GSTR1 before the specified period. Again, that is 30th November of the year, next year. E-invoicing, as we are aware of, from August, the limit prescribed for e-invoicing is 5 crores and above. If our turnover is crossing 5 crores in any of last 6 years, we have to issue invoice with IRN. What is the implication if we don't do this? That invoice, as per the rule, it is not provisional, but rules are issued, drafted accordingly. If the invoice is not with IRN, then invoice is not treated as section issued, invoice is issued under section 31. If the invoice is not treated, invoice is issued under section 31, then section 16, which specified you should have to avail input tax credit, you should have tax invoice. If tax invoice is an invoice issued under section 31, and if we are not issuing invoice under with IRN, then invoice is not a tax invoice. Then it is a huge impact on the input tax credit. Again, litigation. To avoid litigation, we must reconcile e-invoices issued with the sales register. If we are missing any invoice, we have to generate IRN for that invoice. E-invoicing is not only for tax invoice, it is mandatory for credit note, It is mandatory for debit note and again for export invoices. Even supplies to SEZ. Whenever there is export or SEZ supply, zero rated supply, we must take care of whether LUT is issued for that before the transaction. We know our client has must have applied for LUT, or we have applied LUT for all the clients. मगर चेक करने में क्या जाता है? Hardly 2 minutes, hardly 1 minute. Whenever there is a transaction, zero rated transaction or export transaction, SCJ transaction, we must first review whether our client has executed LUT or not, to avoid future litigation. Don't miss shipping bill details. One more important, merchant export. Friends, clients are doing merchant export transaction many times without informing us. Just their customer given them notification number 40 or 41, and as per the notification they have completed the merchant export transaction. Friends, whenever we observe such transaction in case of our client, we guide our client whether you have complied all the conditions in the notification. This is on the sample basis, friends. Whenever or wherever our client is getting any benefit, concession or exemptions, we must check what are the conditions to that exemptions, what is the wording of the exemptions, what is prerequisite to come, or what is requirement for that exemption, and whether our client has complied with that requirement, prerequisite or condition. Any missing of the condition, any non-compliance of the condition will cause huge loss to our client and litigation in future. Refund claim. As we are aware of, refund can be claimed only within the 2 years from the relevant date. A relevant date has been defined in the GST law is a due date of that particular month return. For example, I am claiming refund for the month of April 23. My due date is 20th May 25. This we have covered when we have discussed place of supply. Amendment and correction in GSTR1. Friends, books, we have checked what are the transaction in financials and what are the transaction in not financial. Whenever there is an error in GSTR1 or omission in GSTR1, we must amend in the specified time, that is before 30th November, that is before or in the month of October only, on or before October return. If we missed, we can unnecessarily lose the client, or we can disturb our relationship with the client or customer. It is very important to reconcile each and every transaction before 30th November. What is our practice? We regularly checks after the end of the year, that is March. Immediately we verify from sales register to GSTR1 to E-invoice data, whether any transaction is missing, whether there is amendment required to any transaction. This is a regular job we must follow. And again, it is helpful while filing 9 and 9C. GSTR 3B. We have just completed GSTR 1. Now it is GSTR 3B. It is summary return. We file it is under section 39. It is a monthly return and file on the 20th of the next month. Along with this return, we must pay the declared liability. There is no second mechanism to pay liability, or we can't file return, payable return. In this return, we declare our supplies, outward supplies, RCM liability, and also input tax credit. All the reconciliation we have to complete while filing GSTR 3B. And such a, I can say, system-driven return, if we put 1 rupee excess or less, it is become red. Even we claim less credit, it become red. Again, 16(4) and all provisions are there. If we delayed filing of return, now we can't file return GSTR 1 only. We have to file. Earlier, clients are filing GSTR 1 for multiple periods, and they don't file GSTR 3B. Now, the government is so smart. They amended all the provisions, and system is drafted, changed in such a way there will be less manipulations, and it is good for the industry, because non-compliant people will be out from the industry. Who should file return? Every registered person should file return. But following registered do not have to file return. Like taxpayers registered under Composite scheme, they CMP 08 and all they file. Input service distributor, they file different return. Non-resident suppliers of OIDR, they file different return. That's why they don't file 3B. Now input tax credit. Friends, purchase register given by the client or reconciled with 2B is not sufficient to avail input tax credit. There are so many conditions in section 16, 17, 18 to avail input tax credit. Most of the conditions we are aware of, but because of the huge data or huge number of return we have to file in a specified time, we don't maintain some details while filing return, especially for input tax credit. Like, we don't check whether the goods are received by the client on which we are availing input tax credit, or there is no mention on the invoice or in Tally or in any accounting software except SAP, where we generate GRN. We don't have any detail whether goods are received or not to the client before availment of input tax credit. And after amendment in 16, now we have to avail input tax credit according to the GSTR 2B. We cannot avail more than that. Only in case of import, if the transaction is not reflected in 2B, nowadays it is reflecting. But if don't reflect, you can avail input tax credit. Reversal of input tax credit. If there is non-payment of consideration within 180 days. Friends, this column is also we don't maintain in input tax credit register. But 18% interest is payable if our client is not paying the invoice value within 180 days. If we paid partly, the proportionate reversal is occurred. This 180 days reversal is not applicable in case of reverse charge mechanism and Schedule 1 entries, because there is no payment at all. Compliances related to input tax credit. When we reconcile input tax credit register with GSTR 2B, we must find out what are the transactions covered under section 17(5), which are non-eligible input tax credit, blocked input tax credit. If the transaction is covered under section 17(5), you just mention in the particular column, these are not eligible for input tax credit. Discuss with your principal, discuss with your client, these are not eligible for input tax credit. If we avail input tax credit, at least don't utilize input tax credit. If the interpretation is dispute is there, or any case law is pending, like input tax credit on construction activity, the case is before the Supreme Court or a Safari Retreat High Court decision of Odisha High Court, some other reason, you all student must discuss these things with the principal. Only if we following sections properly, provisions properly, you can grow yourself, you can file return with understanding. Or clerically filing return is not a smart job, or it is not very much useful in your studies also. If you understand return, if you understand the business of your client, if you understand the provisions of law, then only you can file correct and complete return. What is observed, we only put exempt supply in the column, and we don't reverse input tax credit under section 42, 43. It is totally controversial. If we are mentioned exempt supply in the exempt column, we must check whether rule 42 is applicable or not. That much maturedness or clarity we should have. ITC should be availed after reconciliation with 2B. We have just seen section 16 is very clear. Your purchase inward register input tax credit should be reflected in 2B. Identify the supplier who are not paid taxes, whose registration is cancelled, and don't avail credit, or discuss with the principal and client to take the appropriate action. Friends, we have details about the non-filers of GSTR 3B for the earlier period, but cancelled registration is available for the particular software. If we are using some particular software, then that software is giving details of the cancelled registration, registered suppliers. Because of this reconciliation now, 2B reconciliation, we are forgetting to avail earlier period input tax credit, if any. Friends, please maintain reconciliations yearly, monthly, periodically, to just check whether any input tax credit we have missed in the earlier period, which can be availed before 30th of November of the next period. Or we will lose the input tax credit for our client. Whenever there is mismatch of any item in 2B, mismatch in invoice number, place of supply, or amount, proper communication to the supplier must be there, proper follow-up must be there until it is get rectified. Now one more work or one more circular department has issued. It is very smartly drafted. Till date, what type of notices we receive? Input tax credit according to 2B is 100 rupees. Input tax credit according to 3B is 80 rupees or 90 rupees. Oh, there is no short availment of input tax credit. Liability nil. Even though in that 2B or 2A, ineligible input tax credit is of rupees 50, purchase of car or some higher construction related invoices. The input tax credit in 2B or 2A is at higher side, but input tax credit is availed is at lower side. Now department is not in a position to auto find out in their system whether SSE has availed excess input tax credit or not. Now they have issued this circular, presentation of input tax credit in 3B. Smartly drafted. If the input tax credit as per 2B is 100 rupees, we have to mention eligible is 80 rupees, ineligible is 10 rupees, and 10 rupees is availed after, that is in the next month, because non-receipt of goods or any other reason. Then we have to present our GSTR 3B table 4A according to this circular. What is the crux of this circular? Total ITC, eligible as well as ineligible of the taxpayer, will be auto-populated from the statement in 2B in different fields of 4A. What is the exception? Ineligible ITC on account of 16.4, where location of the recipient is different than place of supply. This cannot be bifurcated in 4A. Understanding the crux of the circular. When supplier is filing GSTR 1, supplier Mr. A is of stationery, which is eligible credit, and supplier B is of insurance company. The insurance which is blocked credit, if it is for the health insurance or life insurance, which is blocked under section 17.5, is not eligible credit. When I seen my 2B of a recipient, both invoices are reflected, 18 rupees and 36 rupees. अभी तक हम क्या कर रहे थे? हम just eligible credit book कर रहे थे. Ineligible credit we used to book with gross amount, or we don't mention it separately. Now new system क्या है? New circular, as per circular, ineligible credit also we have to book and mention in GSTR 3B separately. See, there are two columns. One is permanent reversal under 4B as per rule 38, 42, 43 of CGST rules and 17.5. This is permanent reversal. Once you put any amount under this column, you cannot re-avail that credit. But if you put the amount in others, rule 37, 37A, then you can avail re-credit of that amount. Very important, friends. And this by now department is issuing notices, state GST especially, why you availed less credit. If your 2B is mentioning 100 rupees, why you availed 80 rupees? If the 20 rupees is ineligible credit, you avail and reverse it. What is actually changed? See, I have some bifurcate. I have just given you some examples. What are permanent reversal and what is temporary reversal? These columns are given, and if we miss some figures from temporary reversal, we put under permanent reversal, then we cannot recredit. Re-availment is not there. It is very important to mention the correct figure. That's why I have bifurcated some transaction. Input tax credit under section 17.5 is a blocked credit and is a permanent reversal. Place of supply, we have from the beginning we are discussing place of supply is other than Maharashtra. We have to check whether the credit is eligible or not. If the credit is not eligible, we have to show under permanent reversal. Ineligible credit because of section 16.4 is permanent reversal. No one is reversing under section 16.4, but it is not eligible. Ineligible ITC used exclusively for non-business. That is personal in nature. What is personal in nature? Client has purchased refrigerator, oven, mixer, grinders, many things, household things, curtains, whatever is for personal nature. These are not eligible and has to be shown under permanent reversal. क्लाइंट क्या करते हैं, अपना पर्सनल बाइंग के लिए भी अपना बिजनेस का जीएसटी नंबर दे देते हैं. Non-business, again, non-personal, personal items are there. Temporary reversal. Ineligible ITC due to non-fulfillment of condition of section 16. क्या है ये condition? Today you don't have received goods from the customer, from the supplier. Non-receipt of goods. But we will receive this in the next month. I will credit in the next month. Ineligible due to non-payment of consideration within 180 days. Ineligible ITC due to non-filing of 3B of the respective supplier. Compliances related to reverse charge. Friends, we have seen three transactions are most important in GST: outward supply, inward supply, and RCM. We have just gone through outward supply, input tax credit. Now, third important is reverse charge mechanism. Again, we have started with the reconciliation. We have prepared reconciliation entries which are liable for GST in the books of account. Whether we have calculated tax at the correct rate, whether we have paid taxes on the all transactions reflected in 2B or not. If GST is payable on the transaction under reverse charge, we must consider the filing of return. In many cases, when GST is not eligible for input tax credit, clients are avoiding payment under reverse charge, especially in case of TDR, sponsorships. Input tax credit is not eligible or partly eligible. Client is not, or client is reluctant to pay GST under reverse charge. But friends, it is just avoiding interest and penalty liability or litigation in future. It is better to pay it off. Whether input tax credit is eligible or not, we have to consider whole transactions or the specified services, goods which are taxable under reverse charge for computation. Especially, I suggest all of you to prepare one checklist. All the services or goods which are taxable under reverse charge, and check 2-3 times at least, go through when we are reviewing the books of accounts of our clients, which entries should be taxed under reverse charge. Import of services, whether there is any outgo of foreign exchange, the remuneration paid to directors, whether taxable under GST. If paid as a salary, TDS is deducted under 192, RCM is not applicable. But if TDS is deducted under 194J or other than 192, whether we need to check whether RCM is applicable. Sponsorship amount. If the supplier is partnership firm or body corporate, sponsorship is taxable under reverse charge. Security services. If the service provider is body corporate, tax is paid under forward charge. If the service provider is other than body corporate, tax is paid under reverse charge. Rent a cab. If the services are provided to body corporate, taxable under reverse charge. If the recipient is not body corporate, then tax is payable under forward charge. LLP. What is LLP? For the purpose of reverse charge, LLP is a partnership firm. If you refer notification number 13/2017, it is defined. LLP is to be treated as partnership firm for the purpose of reverse charge mechanism. So whenever we review the transaction, we must know these all conditions under which reverse charge is applicable. Whenever we avail input tax credit of the liability paid under reverse charge, we should check whether the input tax credit is eligible or not. For example, rent a cab. Input tax credit is not eligible. Rent paid on residential property, whether input tax credit is eligible or not. If the company or entity is availing the services of residential property for our business purpose, we must check. And it is taxable under reverse charge. That's why input tax credit is eligible. And we must avail input tax credit. In case of rent a cab, input tax credit is not available. Self-invoicing should be there to avail input tax credit. Again, one more example of wrong classification. This is a basic provisions of how to submit return online. I have given for just sake of or knowledge of the student who have not filed return till date. Most of the articles or employees are filing return online. This is for reference purpose. Friends, GST law is regularly amending. Earlier, there was amendment only through the budget. Now there are council meetings 4 times in a year, and there are 4 budget, we must say. There are amendments 4 times in a year. We must regularly update ourselves, regularly read. We must know what are the entries under section 17(5). What are the entries taxable under reverse charge? What is supply in different forms of supply? What is exempt supply? What is non-GST supply? Whether non-GST supply includes exempt supply, whether exempt supply includes non-GST supply, whether Schedule 3 items are supply at all. Since these are not supply at all, can it be reflected in your GSTR 3B? Whether only book entries has to be considered, we can suggest our client this, you instead of showing these transactions under revenue side, you must book under proper head. Unnecessarily, we have to mention the transaction in any of the heads. Most of the times I observed, even transactions written off, discount received, client has given shown under credit side of the profit and loss account. And we are unnecessarily, without understanding the transaction, without understanding the depth of the transaction, we are showing these transactions under exempt supply. Whether these are exempt supply, whether supply at all, transactions written off are not a supply at all. These are purchases against which we have not paid to the supplier. Whether input tax credit is reversible on that transaction. Suppose any written off is there. Have we calculated reversal amount? Because the vendor we have not paid within 180 days, section 16. Proper proportionate credit we must calculate and reverse input tax credit. Today, if we don't reverse, we have to reverse in future whenever there is an investigation or audit from the department. Most of the audit, what we observed, department has recovered liabilities most of the time. In 90% audits, department has recovered liabilities under reverse charge. 90% audits, department has recovered liabilities under section 17(5) or transaction not reflected in 2A, 2B. Why? If we maintain proper reconciliation, if we submit proper documentation to the department, if we have not availed any credit which is blocked under section 17(5), we have paid full tax on all the transactions taxable under reverse charge. import. In case of import, all the condition must be satisfied. All foreign exchange outgo is not taxable under import. We should prepare one summary transaction wise. What is the place of supply? Whether all the conditions are satisfied. If we have proper reconciliations, all proper documentation, all contracts or agreements, we must review whether any transaction is taxable, whether there is a transaction of liquidated damages, whether there is any payment which is covered under the declared service. Many transactions are covered, taxable transactions are covered as per the agreement, but not reflected in books of account. If we review the transactions, if we review the agreement, contracts, our knowledge is also getting improved. We file return regularly for our multiple clients, but how many of you understand the business of the client? Whether some purchases are capital goods or raw material for the client. What is the nature of the business of the client? First and foremost is understanding the business of our client. Basic things we should ask client. All the premises of our client are registered with the department. Whether cross charge has been completed. We see whenever we visit some client's place, around 10, 5, 20 names of the companies are reflected. Or the property is owned by XYZ, owner or partner or director, or in some cases one company, but the board mentioning 10 to 15 names, 20 names, 5 names, whether there is a cross charge, जो रेंट है, रेंट का बिलिंग प्रॉपरली हुआ है क्या? Cross charge is very important in GST. In future, there will be litigation with respect to E-invoicing is concerned, E-way bill is concerned, or Schedule 1 item is concerned, block credit is concerned. We can avoid litigation by properly verifying the transaction, properly verifying the classification, whether the taxability the client is paying. In one example, my client has purchased music system of car in big number, and he requested his supplier to charge GST at 18%, and even supplier has charged him 18%. When the invoice came to me, I asked, this is a part and accessories of the motor vehicle classified under say 8708, and that is taxable at 28%. How can your supplier issue invoice under 18%? He said, sir, sorry, मैंने ही उसको बोला था कि 18% में इनवाइस इशू करना. मैं बोला भाई ट्रांजैक्शन itself is taxable under 28%. Unnecessarily you are calling litigation or liability in future. Better to tax or better to pay correct taxes in time. Wish you smooth and healthy GST compliances. Thank you. Thank you very much for giving me this opportunity and interaction with you. I think, can we ask questions? Can the participant ask questions? Hello? Jainam?
Yes, sir.
Can participant ask questions?
No, sir. No questions.
Okay, okay. With this, I complete my submission, presentation. Thank you very much.
Yes, sir. Thank you, sir, for sharing your such invaluable insights on the precautions to be taken while filing GST returns. Your expertise has truly enlightened us and clarified so many aspects of complex process. Your practical tips and detailed explanation have provided us with the knowledge and confidence to navigate GST returns more efficiently. Thank you, sir. Now I would like to call Krishna Gholve, Joint Treasurer Vikasa, to deliver vote of thanks.
Good morning, everyone. It's my great pleasure to express my deepest gratitude to our esteemed speaker, C. Rajesh Agrawal sir, for their insightful and thought-provoking deep knowledge. Your expertise and wisdom have provided us with valuable knowledge that we will carry forward. I would like to thank our Vikasa committee and all other branches who have collaborated with their tireless, tireless efforts in planning and executing this series. I would also like to thank you all attendees from all other branches. Your presence made this session an effective. Thank you once again, sir, and all of us. Thank you, guys.